Daily Fiscal Pulse for the 1st of July, 2026. We're working with Wednesday's settled data here, so nothing provisional in what you're about to hear. Let's start with the big picture context. Tech and AI are running the narrative right now. You're seeing headlines about Trump acquiring Apple, Nvidia and other technology names ahead of a tariff reversal that sparked a rebound. That's clearly moving price action, but headlines move fast. The real question is what the actual money flows are telling us underneath. We saw meaningful activity on the spending side today. The net fiscal transfer came in at $104.2 billion for the session, with tax receipts driving that number at $32.9 billion. That's real liquidity entering the system. The index itself paints a different picture though. ES futures wrapped the day at 7,542, sitting above the 20-day moving average of 7,467. Your 20-day range is about 368 points wide, so we're holding up despite what could be considered a fiscal headwind. Pull back and look at the recent acceleration. The 5-day average for government spending is running at about $30.9 billion daily. Stack that against the 20-day average sitting closer to $5.2 billion and you see considerably more cash flowing through to households and into the market system. Step back further and the year-over-year comparison reinforces the narrative. Fiscal year to date we're at $1,191.2 billion in spending, roughly 10% below the same stretch last year. That's a significant dial down in fiscal support relative to where we were, and that does matter when you're thinking about liquidity. From a positioning lens, the fiscal backdrop isn't leaning you hard in either direction at the moment. The conditions gauge sits at -12, but here's the thing. We've run this scenario multiple times historically, and even with softer liquidity, the S&P has averaged around positive 0.8% over the next month. Markets don't track liquidity in a straight line. They grind higher regularly in spite of it. On positioning itself, one thing stands out. Leveraged funds have kept stacking long exposure, and margin debt is parked at the 100th percentile. That's high. Historically, when you see numbers that elevated, they function more as a caution flag than a buy signal. We're also tracking 2 consecutive days of rising fiscal transfers. The research shows this pattern has historically tended to precede near-term upside in ES. Nothing certain, but it's a dynamic we monitor. There's some scheduled activity ahead that could shift the picture. The 8th of July has the SSA payment cycle, second Wednesday of the month, which can reorient short-term flows. The 15th of August is when the next major Treasury coupon interest payment window opens. Right now the fiscal signal is neutral. The flows we have coming will be what tips the balance one way or the other. That's where we're focused.